it's been about 4 years since we made our discovery, and just last month we announced our initial PEA for our Tonopah West project down in Nevada. It's established the project as potentially being one of the lowest cost silver producers in the world, with all-in cash costs projected to be just under $12 and about 8.6 million silver equivalent ounces per year. So a lot of forward-looking statements here because we've got a lot to look forward to. So over the course of 4 years, we've drilled out 100 million silver equivalent ounces. When I say silver equivalent, it's just silver and gold. There's nothing else mixed in here, leading to very vanilla metallurgy. It's very, very straightforward and cheap to process. Of that 100 million, about 48 million ounces of silver and 577,000 ounces of gold. So on an in situ metals basis, it's about 50-50. It really depends on the, I guess, the price you're realizing when you sell it, but it's about 50-50. So the PEA, which we just laid out, established 8-year mine life, producing 8.6 million silver equivalent ounces per year at just under $12 all in. We use very, I guess, conservative by today's standards metals prices for a base case. So 1,900 gold, $23 silver, and at that we end up with an after-tax IRR of 40%. So we're off to a good start. Because of the high grades here, this project really isn't all that sensitive to lower metals prices. I mean, it's robust at 23. It'll work even at lower prices quite clearly. But where it really gets exciting is when you start looking at the upside cases. Now, the regulators only let us use 20% above the base case. So when we look at those costs at $22.80 gold and $27.60 silver, you see the NPV ratchet up from 323 to just under $500 million after tax US, and the IRR shoots up to 55%. So, I mean, you can do the math, but at current pricing, it's going to be substantially juicier than that. So for this mine plan that we laid out, we actually orphaned 12 million ounces from the mine plan. So what we're going to be doing right now with the drilling, which we've just started putting results out on, is seeking to drill out a 1 kilometer gap that is set to bring online a whole bunch of new ounces in mine life, but also bridge the gap to those 12 million orphan ounces, which I'll show you in another slide here. But really, you know, what this PEA establishes is that even if we don't add another ounce, this is something that's going to get built. As you can see, we're halfway point between Las Vegas and Reno. So, you know, depending on Vegas, or you know, it's 3 hours to Vegas, 4 hours to Reno, so you can pick your poison. And the beautiful town of Tonopah is right next door. So it's a new discovery, but it's also a rediscovery. 100 years ago, this was one of the largest precious metals producers in the US. And when this discovery was made in 1900, this was one of the most significant precious metals discoveries in all of Nevada mining history. It's said that that Nevada became a state because of the Comstock, but it stayed a state because of the Tonopah silver discovery, which led to the last real gold mining rush leading up to World War I. A lot of subsequent discoveries were made in the lower portion of the Walker Lane district. So very, very important discovery that we're showing new life on right now. Now, it only really had 30 good years between 1900 and 1930. It produced just under 200 million ounces of silver and 2 million ounces of gold, and all of that came from just 7.5 million tons. So it means it's really, really high grade, but it also means the metallurgy is phenomenal. The old timers left no meat on the bones. So, you know, going in 100 years later after production shut down, you know, we've in 4 years established this as something that's you know, still going to be a standard in the industry in modern day. So I've taken you through some of the highlights. You know, what we're looking at just based on the base case is a 2-to-1 NPV to CapEx. So, you know, $326 million after-tax NPV on a $178 million CapEx, and that's got 20 million in contingency in here. In terms of production, it's going to average about 4 to 5 million pure silver ounces every year, and about 55,000 ounces of gold. So, you know, from a domestic production point of view, this will add about 12 to 15% to U.S. production every year. So this is a big, big deal down there. For those of you that really want exposure to a silver, if you just factor in the gold byproduct credit from this, we're producing, use it at the base case, at negative 22 cents for every ounce. So talk about a free ride on that. So this is how our PEA stacks up with every major silver mine in the world operating today. So you'll see the average production makes it pretty significant, but what really stands out is the cash costs. If this goes forward as anticipated, this would be the lowest cash cost all-in project globally. And in terms of domestic production, it would be second to only Hecla's Greens Creek. So it's, once again, looks pretty good, and we're trying to move it forward as quickly as we can based on this. Now, I'm undervalued still by many metrics. I've got a new one to talk about now because we've got PNAV and we can talk about economics, but we're trading around 0.2. Where some of our other peers at the same stage are trading around 0.5. So we think we've got a lot of room to make up, and the markets actually respond very favorably since we put out this PEA. We're up something in the order of 50%, in addition to commanding some investment from Eric Sprott right after as well, which really put some wind in our sails and is allowing us to keep the drills there a little longer than anticipated. So this is what Tonopah looks like today. It's very beautiful. As I said, it's about 3 hours away from Vegas. The highway that connects Vegas to Reno cuts right across our property, and that's, as it goes into town, it sort of turns into a nice little street there, main drag. As I said, it's nice now, but this is what it looked like in 1900. This is horse and buggy. Very, very cool history here. Wyatt Earp used to run a saloon on our property, and he was a deputy sheriff. And one of the guys who actually made this discovery in 1900, 10 years later, became governor of Nevada. So there's some very, very interesting history that goes along with this. In 1912, that's what the district looked like on the claim map at the bottom there. Now, Tonopah itself, historically, it was discovered by big outcropping veins at surface, and it was thought to be just a straightforward east-west trending vein corridor. So the original discoveries and all of that historic production actually started on the east side of town, and then as the old-timers, they went underground, all that production started moving westward. So in the 1910s and early 20s, a lot of consolidation happened, and a very shrewd company called the Tonopah Extension Mining Company could see, I guess, where the puck was going. So they started gobbling up every little small group of patented claims they could, and they consolidated what they figured would be the extension of the district. The last mine in the district that was operating was called Victor, and that happened right at the corner of our property. So it's that purple claim block there, which was the holdings of the Tonopah Extension Mining Company. And they were mining Victor. It was the thickest vein. They got down to around 1,880 feet when they flooded out the mine. And in the 1920s, they decided to try electricity because it was very new to them. And the electric water pumps worked, except the electricity wasn't all that reliable back then. So every now and then it would lead to brownouts and blackouts and flooding, which wasn't ideal. So they shut operations down in 1924. They took out a whole bunch of debt to fund diesel generators and heavy-duty water pumps to be built in foundries over in Europe and shipped across. By the time they were shipped over in 1927, 1928, the Great Depression was emerging, silver prices were tanking, and they couldn't pay back the debt that they owed for this because they stopped mining. So that company went into Chapter 11, 1930. And as I said, I guess the Tonopah Extension Mining Company, they were 100% correct because the 100 million ounces that we've drilled out literally picks up right from that Victor mine, and all of our mineralization seems to be on that purple claim block that we're the first group to bring exploration to in about 90 years. So our 100 million ounces represents the red and the gray areas that you see there. We've got three main areas in our resource. We've got Victor, which is the last operating mine. While they were waiting for the water pumps to be installed at Victor, the old-timers drifted across underground, and they had hit a series of veins in the center called DPB. They never got around to mining them, though. The company went belly up right before they started pulling out ore. So we've drilled out that area, and it's those two areas which we included in our PEA. We excluded an area to the northwest, a kilometer away along the same vein corridor, which we call the Northwest Step Out. Now, from here it looks like we've got 3 deposits. We don't. This is one big underground mine, and what we're doing right now this year is literally just connecting closing the gaps. We've got mineralization bookended on both sides of a vein corridor that old timers were making some serious money on back in the day, and we've got drills turning. So after we put that PEA out, Eric Sprock came in for $5 million, and he did that above market and with no warrants. It was a really good deal, and it allows us to expand our program. So just yesterday, we put out some of our first drill holes on our program, and what we're doing is really two-prong this year on the drills. There's 2 unanswered questions that we're trying to resolve for the market. One is, does the high grade really hang together? So our PEA and resources are all in the inferred category. So what we're doing this year is we're drilling out through the 2.3-year payback period. We're de-risking roughly 3 years or so of the initial production to make this a no-brainer, aiming to convert inferred into M&I. The other thing we're doing, the other unanswered question that we're trying to resolve is how big can we get this? We think that kilometer gap that we're going to be drilling out to link up that DPB area with the northwest step-out area, we think there's a potential for another 30 to 50% there in terms of tons and ounces. So, when we look at it, what's nice about the drilling we're doing right now is we're not drilling looking for random intercepts in space, and we're not even just adding random ounces. What we're trying to add this year is mine life. We've got an 8-year mine life that the PEA outlines, and obviously that's too small, even though it's robust. So what we're trying to do is take it well beyond 10 here. If we're correct and this drilling goes as anticipated across that 1 kilometer trend, you're going to be adding serious mine life in the order of 3 or 4 years if we're successful. Not only that, if we can bridge the gap to that northwest step-out area, that's going to, I guess, unlock that economic potential too and bring it into the mine plan, giving us more joy. Very straightforward operation. Nevada is a good place to be, anyways, in the mining industry. But we've got private land in Nevada, so our entire resource area and operation is on patented claims. That means effectively there's no federal government involvement in our permitting process whatsoever. We're using this PEA as a roadmap, I guess, to kickstart baseline environmental studies. We've got to look at water and air quality and get those going as we crystallize our mine plan with further drilling, so that we'll be in a good position to make submissions when the time comes. Turnaround time once you make your submission to state and county regulators is 12 to 14 months. So if someone were to buy us tomorrow and aim to build it, you'd probably be producing in about 3.5 years. So as Lassonde curves go, this one would be as compressed as it gets. A lot of benefits that we enjoy here, which help keep costs low. I mean, we're right off a highway. You've got your pick of, we've got a Subway on our property, we've got a Burger King on our property, right across, Comfort Inn and Suites, infrastructure, electricity, casinos. The only security needed in Tonopah is at the casinos. It's just as good of a setup as you can possibly have, and a very, very it borders, it straddles Esmeralda and Nye County, 2 very, very pro-mining jurisdictions. And the town of Tonopah is there because of the original silver discoveries. It's got 2 different mining museums, one of which actually overlooks the Victor head frame. So you've got a mining museum talking about the significance of the district overlooking the last head frame, which was ours, and we've now drilled out effectively another Tonopah district. All of that historic production came with across 4 kilometers of strike. We've drilled out 4 kilometers of strike, and it's going to keep going by the looks of it. This is one of my, it's my favorite and my least favorite chart. What this shows is our enterprise value ounce in the ground valuation compared to our silver equivalent peers. So this is every large silver project in the world that's either that's got a development or resource on it. So 90 million ounces or larger, and we've separated it out by grade along the x-axis, and along the y-axis is how our ounces are trading. What you'll see is we're the highest head grade story in the industry. This is actually based off of resource grade, so it doesn't factor in dilution into that. But even at that, we're showing about half kilo. When you look at the head grade that we're going to be mining here, it's actually 570 grams is the average. Our next closest comp would be 370, so we're 55% higher head grade than our next closest high grade peer. And at that, I'm trading for half the valuation, the ounce in the ground, of my two other really high grade peers there. So there's a mismatch there. We just put out those drill results 2 days ago, and we've moved about 20% on the news. I guess I glossed over it, but we hit one of our highest grade intercepts ever at the project, 8 kilograms per ton in our shallowest drill hole ever, which was 174 meters below surface. And that was starting off on our M&I program. So if people had questions if the high grade hangs together, we hit 4 different intercepts over between 2 to 3 meters, including one 8.5 kilo intercept over 1 meter or so. So this thing's tying together, which is why the market really seemed to enjoy it. But we've got a lot of news to come. We've got 2 rigs going through the end of the year. We're adding drill holes as targets emerge. We hit a new structure on the drilling we just did, which is very near surface, shallow, and it'll be probably the first structure you'd encounter when you're underground. And we're going to be deploying some capital on that too. It's been a wild ride so far, 4 years later, and give us another year and a half, and I think we'll be able to take this initial starter PEA and see that mine life grow and keep the capex right about the same. The 1,500 ton per day mill we're pretty confident in, the production profile we're confident in. So if we can add 40 to 50% more mine life, this is where you're going to get some blowout numbers.